The markets have turned red as we give back a lot of the gains from the post-Trump election victory. We'll be discussing that, what we're viewing in the markets this week, how we think things are going to play out, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research before making any buys or sells. Kev, happy Monday. We are back. I woke up, checked the prices, bad prices, lots of red. But you know what? That just meant we had a better opportunity to buy some things, which I have done so far today. So excited about that. How are you feeling on this Monday, 1 week away from inauguration, something that the crypto market has been hoping for a while? So what are your takes on the state of the market and how are you handling things?
Yeah, the market for the most part right now is pretty. I think the euphoria has waned since the election. We closed that major S&P gap, Dow gap, NASDAQ gap that we saw from November 6th. I think that was when it was, that Wednesday after the election, and it's completely closed. So I think people are a little bit scared. Again, we're a week out from the markets having another huge catalyst. We're going to have a new president. The interesting thing, too, I think that a lot of people have to keep in mind is that when the markets, and they are a bit oversold here, are, this down and out, I feel there's always a good chance for a bit of a squeeze, a bit of a push up. So this market's not going to go one way or the other that easily. I think that there's going to be a lot of fake outs in the coming weeks or so. I don't necessarily know if I'm going to stay bullish as I am today, 2-3 weeks out, because there's things that definitely still concern me in the greater macro look. We'll take a look at like the dollar and bonds today. But yeah, I'm short-term bullish still. I just don't necessarily want to be too bullish going into the next few weeks, especially into February.
Yeah, I'm not really sure what to make of it. We didn't do a show Friday, so I think we should probably talk about the data and the jobs report that came out then, showing unemployment rate down to, I believe, 4.1, more jobs added than expected. That scared the markets, has led to, some larger funds and institutions out there believing we may not see any rate cuts this year. Others reducing their target to maybe 1 or 2 rate cuts at most. And, when you look at the CME futures right now, we're looking at, 97% chance of no move in January. There's not a meeting in February. Then in March, we're looking at another 80% chance of, once again, skipping any sort of rate cut. We need to see what the inflation numbers look like this week to, I think, get the next piece of that. We get producer price index tomorrow. If that comes in hot, that spells that's a bad precursor to the Wednesday CPI report, as well as futures PPI and CPIs. So this could be a spot where if the numbers come in hot this week, and the current expectation is that headline CPI is going to come in at 2.9%, which would be higher than the previous reading of 2.7. Let's say CPI comes in at 3, surprises to the upside. We could be looking at potential rate hikes again, taking back some of the cuts that we got near the tail end of last year. So the markets are very skittish right now. It just seems like, we've seen a little bit of a bounce this afternoon in crypto and TradFi. NASDAQ was down considerably more earlier in the day. It has rallied quite a bit, but that could get wiped out, and then much more if we get some hot numbers tomorrow and Wednesday. So definitely something that we need to keep our eye on.
Yeah, I completely agree, which makes me think that we're not going to get those numbers until a few months after, or at least the true numbers, right? We haven't got really any true numbers for the past 4 years. I mean, we've gotten a lot of revisions, and I think we've had more revisions that were, not so kind to how the true economy looks, the labor markets, inflation. So I think that nothing's necessarily going to change in that regard. We might just get expectations, like hit expectations, and the market's like, hey, that's a good thing. You know what I mean? It wasn't bad, it wasn't great, but at the same time, we can kind of live another day. That's kind of my assumption for what will happen, especially with the last OpEx before, a new president, and it's the last week of Joe Biden being president. If there is going to be any major change, I would expect it to be Friday or Tuesday next week because markets are closed next Monday, which is funny that it's also the inauguration. But we can take a look at some things in the markets right now that are kind of pointing that maybe we are about to see some major moves in the market, but reasons why maybe not so much this week. So I'm going to pull up the dollar right now because this one has been absolutely insane. I was bullish in the dollar all of last year. Seems that I was bullish the wrong year. Again, the reason I was bullish on it for so long was because I expected a major crash, right? And that's kind of what you expect when you're starting to see equities go down, you see the dollar go up. And, the past few weeks since Trump rang the bell on the New York Stock Exchange, which marked the top of the market, the dollar has just rallied stronger and stronger. And that's just accelerated this push up. I mean, the height, oops, I pressed the wrong button there. But the height of today's move went all the way to 110, 176. The last time you were at 110 roughly was during the collapse in November 2022. And then obviously, as prices went down, people started swapping, to the dollar for other assets. People were also scared, so they ran into treasury bonds, treasury yields. I said that wrong. I don't care. But basically, what we're looking at here is that the dollar is at a very critical level. It's very dangerous. The only other time it's been higher than this is literally been the top of the market, towards September of 2022, and that's for the dollar market. And we obviously, this is actually when we were starting to hit the bottom of the market. My bad. I was looking at 2021, 2022. That was the entire lead into the October 2022 sell-off. And then obviously November was terrible with FTX and a lot of other things that kind of just rounded out the bottom for both TradFi and crypto. So we're getting at a point where, maybe this is going to break something sooner or later. It's definitely hurting Forex. I mean, we haven't looked at this in a while, but if we look at the euro versus the US dollar, I mean, this thing fell off the cliff. This is what we were waiting for the longest time. It played out a lot longer than we wanted it to, but we're starting to see these foreign currencies get weaker against the dollar, which isn't necessarily the greatest thing possible. We also want to look at the USD JPY, which is the yen. We're seeing that this is getting to a pretty critical level. Where is it going to? July 2024 levels. What happened in August of 2024? You know what I mean? So there's a lot of things that are similarities that are kind of playing into each other that we saw back in August that maybe this time it's a lot worse because there's a lot of things that have changed since or accelerated since. So if we're looking at the yen carry trade, winding back, and this is something that we're going to look at over the course of the next few weeks because I think it's going to be a problem again, the carry trade. We got to look at how the VIX broke out of this a lot earlier than we expected. And, this morning we had a major move in the VIX. It was at 22. The funny thing is that the VIX on average, when we're not in, this hyperinflationary, there's so much money out there that people are buying stocks nonstop. And the institutions aren't, piling everything into equities. The VIX average is about 20 or so, 19 or 20. So now, I mean, it's not necessarily out of the average right now, but it's so different from what we've experienced for the past few years that this is like spooking a lot of people. But it also, we saw how much it got crushed here. So the fact that it got rejected so hard and we saw it pull back, I mean, it's only down 0.56% when it was up, over 10% this morning, tells me that there could be a bit of a pullback, but we're also seeing that there is that danger in the markets, both the dollar, the VIX, and if we go real quick to the treasury yields, which is killing the banks right now, we look at the 10-year. 10-year just hit 4.79 today. This is the highest it's been since, once again, November of 2023. Are we going to push for a little bit higher? Well, it really depends because we're looking at this in this channel. This is a bull flag. Does it keep pushing up higher? And if that's the case, are we in a screwed up position where, we're going to see a lot of bank failures and a lot of things are possibly going to go wrong and we can continue to see, inflation be an issue? Maybe. It really depends. We need something to break to make one of these things make sense. All of them together doing separate things is just complicating our clarity of what we can expect for the markets in 2025.
Yeah, volatility is going to be the theme of this year, it would appear. What else? I mentioned inflation data this week. That's going to be the main driver the next few days. We've talked a lot about liquidity in the markets. Like you've done it with the reverse repo and everything. I've been really, from a more retail investor side, looking at like money markets. Money market funds just hit another all-time high for balances of 6.9 trillion. Inflows double the average last week. So it looks like a lot of people are seeing the writing on the wall that rates are going to remain elevated, and they're happy putting large sums of cash into something that's earning them, 4.4, 4.5%. Why wouldn't you be? If you're not really looking to take on risk during these uncertain times. That said, it will lend an opportunity for those who are willing to take on that risk, can be patient, let things play out. So I think that is, that's one strategy for the market right now, especially if you're not in a place where, you don't have a sum of cash that is going to earn you, a significant amount from that return. So it's kind of curious. I mentioned earlier, I did a little bit of buying. I bought some alts that were on sale earlier today. Felt like they were a bit oversold, and that's going to be kind of, I think, my strategy for the months ahead is on these days where there is a lot of fear, maybe a little bit of capitulation, trying to deploy capital and not trying to trade these things. I'm not much of a trader at all. So I think that's kind of the view I'm taking of, when I see some of these tokens I like, whether it's Link or AVAX or Optimism. Optimism is not like my mindset right now. It is an actual crypto token. Acquiring some of those when they are on discount, because I do think that we will see an alt season at some point. Maybe it may not be this year even, but I do think that in the future those will see good returns, and I'm okay accumulating them for the time being.
Yeah, I agree with timing too, right? It might not be this year, but I do think that we will see an alt season. And again, some of these things are, they're nowhere near their all-time highs. If it goes down lower, then you just DCA in, and then you can protect yourself in case you have the opportunity to sell at a higher price level that it pumps out of nowhere, or if you just want to bring down your average. There's a lot of people out there who have bought a lot higher. But I did want to bring up timing because you mentioned it, and my base case is that we are going to have a crash in 2025. I think there's a lot of things that are just complicating, any type of bullish momentum to the upside. Again, the fact that there might not be any rate cuts, just going to kill the yields until the banks are pretty much eating so much debt on anything north of the 4-year, like a 5-year, 7-year, 10-year, 20-year. All those are going to be, toxic, exposure they had to the treasury market. But I want to pull up the Bank Term Funding Program because last week we didn't get the data on Thursday night. We got it on, I believe, Friday, which is because of the Jimmy Carter thing. His funeral, my bad. But looking at this here, the Bank Term Funding Program, it's down 24% from the previous week. We're getting very close to draining this facility. And again, I bring this up because of the timing of where we are in this market. 3.35 billion. Is that a lot of money? Not necessarily, no, right? Compared to when it was at 64 billion or something like that. I think it was even higher, it was like 152 or something like that. 167 billion at one point at the height of this monstrosity that saved the banking system back in March of 2023. The interesting thing, though, is that we are draining, and we're looking at this, and every time that we see an emergency repo drained into zero, very similar to that we saw in February of 2020, we see some type of major market crash because it is pretty much drawing liquidity out of the system. The central banks are kind of just weaning off a lot of these banks to access to liquidity. This is what we're seeing here. The interesting thing, too, is the reverse repo is under 200 after being north of 450 or so back in the last day of December last year. So we're seeing this kind of below the 50 moving average. I wouldn't be surprised that over the next few weeks, and again, maybe it's $1 billion a week that we've seen for the past few weeks that's drained out of the BTFP. We're seeing the reverse repo kind of, fluctuating between those ranges. I wouldn't be surprised that if we are looking at timing, February is when we see some type of major crash. Maybe it's similar to 2020, that OpEx area, that time frame. And I would say maybe 2026 is when it kind of bottoms out. There could be a bounce somewhere in between there, right? Like a dead cat bounce. But if we are looking at some type of major correction in the market, say north of 20%, I would feel fairly confident this year being kind of shitty. Again, we've talked about it last week. We're having Trump back in office again. Very volatile moves based off of this guy because no one ever knows what he's really going to do. I think that's going to scare some people in the market, but there is the possibility we do get a black swan. We haven't talked about some of the damages from the fire. Maybe we could talk about that in another episode soon, but those are mounting up to north of $250 billion, which is interesting because California is also one of the largest economies in the world. So there's a lot of things that are kind of playing into this, but I think what we're seeing here is that we can expect some type of risk off movements in the markets in the next 3 weeks or so. That's kind of a bold statement, but I do think that we are draining this according to a schedule, $1 billion a week from the Bank Term Funding Program for the past 5 weeks. And then now we're going to see, the reverse repo possibly drain, setting up for a good squeeze right before some type of major crash. Again, 2020 crash from the all-time highs. And then, in a matter of days, it was down, 37% or something like that. So maybe not that fast, but I definitely think that's the setup we're looking at here with liquidity and timing.
All right, let's take a little look, just some individual stocks. We can look at crypto a little bit as well before we wrap this thing up. We've gotten that bounce from earlier in the day has kind of led things back toward fairly neutral. We see the Dow actually had a decent day, up 0.75%. The Nasdaq down 0.5%, and the S&P is pretty much flat on the day at this point. So nothing too interesting there. What about on the crypto side? We saw Bitcoin go under 90K for a minute. It's now back to just under 92. ETH went sub 3,000, approached 2,900 for a little bit. It's now back, barely fighting to hold that 3K level. What's your focus right now in the crypto markets?
Yeah, I'm looking at this with Bitcoin. You went down to 89K, but you hold support there, and it's extremely oversold on the daily. I wouldn't be surprised if we get a major squeeze up. I hate saying that, but again, I have no position in crypto whatsoever, but I genuinely do think that there is a potential for a squeeze, maybe closer to 100K, maybe a little bit higher if everyone just goes balls deep into this market. I'm also on this, and again, maybe this just shows that I don't necessarily know what's going to happen, but I could also see a lot of this draining out to that 77K, and you start seeing some of these TradFi stocks like GameStop, see some of that rotation of capital in. But looking at this chart right here, there's a few things that we could say we're looking at. We could say that this is a triangle right here, and we're waiting for the apex, which would break out somewhere around Friday or Saturday of February this year, February 7th, which is also an OpEx date, which is kind of funny. The other thing that we could take a look at this and say that we're kind of in possibly, and again, I'm only saying this because I just saw this, but maybe we're looking at a parallel channel. This kind of seems like it's a parallel channel, so maybe we trade within this range a little bit. Top of this would be literally 99K, closer to 100. If you break out of this, maybe you hit a double top at 108, maybe you go higher to 115. It's very possible that we could have an insane amount of liquidity come out. We know that Tether hasn't printed in quite some time. I wouldn't be surprised if out of nowhere you start seeing Tether prints, one last ride up to the top.
You see Tether is moving all their operations to El Salvador.
Yeah, I saw that. Let's see how well that goes. You can get away with stuff when everyone benefits from the price of Bitcoin going up. I think China and the U.S. obviously have some strained relations. Then, iFinex being the company that owns Tether is going to be complicating, maybe the ability to print, especially if the U.S. is slapping on tariffs. I think the U.S. is doing its best to get rid of Tether. Eventually, it will be a different stablecoin that's the top traded pair. But that being said, we're looking at either a massive blow off top to, I'd say, 115-ish, or we're looking at, the drop to the 200 moving average, which is 78, 77K or so. That's on the daily. If we look at the weekly and the monthly real quick, before we get into some other stuff, the 50 moving average is all the way down here. So, and when I look at this right now, we got a mess. I mean, this is so stupid, this Bitcoin chart. I mean, it just keeps going up and up. That's why I think this crash is going to be pretty bad for Bitcoin. But when we look at this here, we can say that we've got our wave 1, our wave 2, wave 3, wave 4, and then maybe we have a little bit of an extension on the wave 5. I don't think it's going higher of 115. That's just my opinion based off of this chart. And there is a little bit of room. He came out of the oversold in the fifth on the weekly chart for the stochastic RSI. Again, I think it's going to have to come down to how much liquidity can be pumped into the market via stable coins. We are seeing a lot of demand right now for stable coins. We're seeing the dominance in the market is going up pretty strongly. You can see that we just got the death cross on the weekly for USDT's dominance. Let's see how that plays out over the next few weeks itself. But on the daily, you're getting pretty overbought. So I wouldn't be surprised if this comes down and you start seeing some money go back into the BTCs, the ETH, and some of these other coins. Other things that are really interesting too. XRP out of nowhere just broke out. It's retesting that trend line. But this kind of tells me that maybe there is a lot of money that is ready to come into this alt market and into Bitcoin and just have one little last pump. I don't think it's very easy to just have a market bleed out slowly and then next thing you know it crashes hard. I think it's a lot easier to see the markets crash from a higher position and then it's just like a massive, liquidity sweep just all the way down. That's just my opinion from what we've seen the past few years. Outside of that, I don't know. I guess crypto is the one area I'm very torn in this market. I can see liquidity coming for TradFi, but for crypto, it's make or break.
Yeah, I'm gonna want to see what the ETF data that comes out this afternoon will be as far as the daily inflows or outflows for Bitcoin ETFs as well as the ETH ETFs. I think that's gonna be really telling, as we see this big move down today. So, anything else, or are we good to wrap it up?
Just real quick, we talked about this head and shoulders pattern in the S&P, broke down from it. He filled that gap from the election. Why that's important? I think there is a little bit more room to the upside here. I think you can get that push up above the 50 moving average. And again, that's not really necessarily a big move. If we're looking at what that is 91 points, so 1.57%. I think that would freak a lot of people out because it's like, oh, we lost to 50, but now we're back above it. We're trading above it. Liquidity dries out a few weeks, then maybe you have that true break of the head and shoulders and you test that 200 moving average. The other one that's been just absolutely bonkers to watch today, and bonkers sounds like such an old man word, but it's been truly crazy, is GameStop. I continue to follow this one because it's trading within this massive triangle, but every time it comes down, these fuckers are buying. And I mean that from an institutional standpoint. There's a lot of institutions buying. You're also seeing a lot of net call premiums going up. But every time you have a major dip, this thing is just bought right back. And what you're going into is a major coiling point. Everyone's kind of expecting Roaring Kitty to come back. Everyone thinks that Roaring Kitty is Greg from Twitter. There's a lot of theories and stuff like that, speculation that he's going to come out and tweet at some point. I think this would actually cause the market to break out of this position. And the thing is, if GameStop does break out of this wedge, then you're going to see prices obviously a lot higher and it's going to be more expensive for people to cover. I wouldn't be surprised going into this OpEx if people that have positions in the money start exercising some of those options. So if people were bought, calls at 24, maybe about 6-7 months ago, and it expires Friday, maybe they exercise some of those and that pushes the price up because there's a demand for shares, right? As of right now, options calls is a derivative. It's not necessarily anything. You're selling someone the ability to buy something at a later date for a certain set price. But if you start seeing that demand, people start exercising, that could actually squeeze the price up. So this is one we're going to continue to watch. I wouldn't be surprised if this just went vertical in the next few days. If it doesn't, then obviously you're looking at a max pain trade and then maybe it comes back at some point. But GameStop, I still think is a very interesting stock, and it's getting to the point where it's going to be parabolic. You can kind of see it here. It's coiling up parabolic, and we might be looking at GameStop north of $45 in the next 7 days or so. So just something to keep in mind, something I'm going to continue to watch. I tell you guys, when I'm bullish on something, I'm completely bullish. And unfortunately, it's GameStop this time around, but it's been fun so far.
All right, that is going to wrap it up for today. If you have not yet and you're still watching, hit that like button, subscribe to the channel, drop a comment. We'll be back on Wednesday to discuss the latest inflation data that will be coming out the next few mornings. So make sure you join us for that one. In the meantime, stay safe in the markets. Appreciate We'll see you next time.
Take care, everyone.